Hey YouTube, and welcome to my channel. My name is Anna and I'm in my late 20s living in London, UK. Today I'm sharing with you my Trading212 portfolio updates. This channel is all about my personal finance journey, trying to retire early but also while enjoying my life and trying to save and invest my money, make good financial decisions and grow in terms of my finances. I am not a professional by any means, and this is not financial advice. This is just basically me sharing my journey, what I learn, what I pick, what I choose. And yeah, if you're interested in seeing how I'm doing in terms of my portfolio, then keep watching. I do have an investment portfolio on Trading212, but I also do have an ISA. I know that there is quite a few platforms that are popular in the UK besides Trading212. There is also Vanguard, which is a really good one. There's also interactive brokers that I will be using in the future as well. But Vanguard is another great option for those of you that would like to invest in Vanguard ETFs, and I would definitely consider that as well. I personally chose Trading212 because in the beginning of my financial journey in 2020, I found the app very easy to use, very friendly. The GUI is really nice, it's simple, it gives you all the information you really need as a beginner, as an investment beginner. So I am overall still very happy with it, and I might open a Vanguard account in the future, but for now I don't feel a need. I will be using interactive brokers because I would like to have a wider exposure to some stocks that are not offered by Trading212, but I still think that if you're a beginner, this is a great option. Unfortunately, the link down below does not work if you would like to sign up and use my referral link, because Trading212 only does this referral program once in a few months. So I'll definitely let you know once it's available again, but unfortunately it is not at the moment. I do have an interactive brokers link though, so if you want to check that one out, feel free to do so. The interface is not that easy, I would say, to navigate, so if you're a beginner, I highly recommend Trading212. You don't even have to put in money. You can start investing with virtual money just to get yourself familiar with the app. So I'd highly recommend that, and yeah, let's get started with the overview of my current portfolio. So the first share, as you can see, it's Bank of America, and this is the share I got from the referral link that I shared. And how it works with Trading212, if you use the referral link, you get a share and the other person also gets a share. So I think it's a great deal, and this is what I got. It's the only share of Bank of America that I do have. I do not plan on buying anymore, and as you can see, the share itself is not doing very well, but that's okay. You know, free share is a free share. I'm not going to complain about that, right? And as you can see, it's still worth over £20, which is really great. We are down over 20%, but I will not complain whatsoever. DOW is another stock in my portfolio. If you are not familiar with DOW, which I believe an average person based in the UK has no idea about them, and they are basically a producer and supplier of raw materials. I think they are in like 6 different industries, and they are paying very good dividends, over 5%. I classify that as good, so everything above 5%, just for context, it is pretty good in my eyes. How did I find out about DOW? It was actually a coincidence. An American friend of mine, he did recommend me to have a look at the stock, as he it was or is, I don't know anymore, and heavily invested in them. And I did have a look, and I did not have anything in my portfolio that was paying me any high dividends. So I did decide to go for it without doing much research on it. I was just trying to kind of time the stock and buy some portion for a good price. Unfortunately, as you can see, I still bought it at peak times where the price was pretty high, and I did not have as much knowledge as I do have now, and I definitely would not buy it again, just because I do not know much about the company. I just bought it influenced by another person, and this is first kind of big mistake on my journey, and I would like you to learn from it, because I highly advise you to research any company that you want to invest in, especially if you're choosing stocks, because with ETFs it's much easier and also less risky than when you are opting for buying a stock of a company. So please keep that in mind if you're trying to invest in stocks and different companies, because every company has their troubles, struggles, and if you do not follow through all the news, you might end up losing quite a bit of money. As you can see, I am down over 4% at this time, but I invested quite a lot of money, so it's over £100 that I'm in loss. But I do not mind that, because I am not planning to sell until I am in profit, at least slight profit, but I do plan to sell that stock because I would rather invest it in ETFs. Um, as you can see, it has not been serving me good. So yeah, this is not something I will hold on to in the future, because I have no interest in researching that company, and I would rather invest in companies that I do believe in and know more about. Another one, as you can see, is eBay, a company that you probably know. I was also personally a seller on eBay, and this is why I have purchased that stock in the first place. I was a very small seller on eBay. I really enjoyed using it, and it was in 2019, 2020, 2021. So I was really happy with that. But since then, they have changed their platform a bit, and I decided also to close my shop. I do not really use eBay that much anymore. And if I was in profit, maybe I would have been happier. As you can see, I am not in profit, and I am like over 15% on minus on those 12 and a half shares. So this is another stock that has not been serving me that well, and I would like to sell it in the future. But for the time being, I am okay with a loss. And this is another thing that you have to prepare for mentally when you're investing in single stocks, and just generally in the market. It's only not only stocks, because ETF returns are also not guaranteed. So past returns do not guarantee you that you're gonna gain money over time, and you might be in loss, and this is something that you have to keep in mind. But if you don't take the risk, you're not gonna win anything. So you have to be aware of the risk that you're taking. And if you would rather put your money into a high savings account, I think it is also a good idea, in the beginning, if you're not sure, if you wanna, start small, then always research which accounts have the highest yield. At the moment, I think there's quite a few in the UK right now that offer over 3%, which I think it's pretty okay. You know, it's not gonna give you as good returns as the stock market might give, but if you want to start slow, please start with a savings account. And let's move on to the next position in my portfolio, which is another stock. And this one is in Glencore. Glencore is a mining company. I had three companies that I was researching, and I was trying to find a good entry for one of them. And it just so happened that this was the one company where the shares went down a little bit, and I have managed to first purchase 100 shares and then add another 90. So as you can see, now we have 190 shares, and I have been dollar cost averaging them, so-called DCA. So I basically bought them at prices that I thought were a good entry. As you can see, I am on a slight minus, almost minus 2%, but I am totally fine with it. I thought it was a good entry point to add some more, and that is why I have recently bought 90 more shares. And here we come to the last stock in my portfolio, which is Tesla. And I am pretty sure all of you know Tesla and Elon Musk. So this is one of those shares that went up a lot when I was holding it, and I did not sell. First, back then, I think I made over 2x on it, and I did not sell to rebuy during lower price times. And then I was, I think, over 40% up, or even 50 recently, and I also did not sell. As you can see, I am still holding it, and now I am only 17% in profit on average at the moment. And this is this kind of situation where I am not sure if I made the right decision, probably from the financial point of view, or someone who has more experience with trading and is more advanced. I should have sold it and rebought it at a lower price, because I would have simply had more shares at the moment, but I did not. I am there for the long run in terms of Tesla, so I am okay with not selling. However, I might try it in the future. I am not sure, because I am still new. I am not a trader. I'm just a simple person that is on a learning journey, and this is a part of it, as you can see. Let me know if you sell high and buy low, because I think this is a pretty good trading strategy as well. But as I said, I'm not a trader, not a financial advisor, so I have not tried it yet. And here we come to the end of my portfolio, and these are my ETFs. Firstly, I have Vanguard FTSE All World ETF, which is based on an index of over 3,000 companies. It's so-called VWRL, and this one is based in Ireland. This is a great diversification because it does not only hold stocks in the US as opposed to S&P 500, but it also follows international companies all over the world. So I have bought it because I did a bit of research, and I heard that it is good to diversify your portfolio and not only focus on America. And I did want to definitely diversify just in case, world companies based in other countries than the US will do much better than the US economy. As you can see, I am only up over 6% on that one. And if you look at the graph, it has went down in price. The whole ETF has not been doing that well recently, but I am absolutely fine with that. I am holding 29 shares, and for diversification, I am happy with this position as opposed to S&P 500. As you can see now, comparing that VWRL, the All World FTSE Vanguard, S&P 500 from Vanguard has been doing much better. If you're wondering why I do have two of them, they are both the same thing, but one is VUSA and one is VUSD. What does that mean? Basically, one is in dollars, in the American currency, and the other you can purchase directly with pounds. It's much simpler, but there is not really a big difference if you decide to purchase the one in USD, because you will get the Trading212's conversion rate. So it is not like more complex to purchase the one in dollars, but I think if you're based in the UK, if you plan to stay in the UK for the long run or for the next 10 to 20 years, I see no reason why would you want to buy it in dollars, but of course it's up to you. As I said, both the same things, and as you can see, I have 46 shares that are the VUSA, which is the pound version of the index, and I am up over 19%, which I think is great. I am very pleased with that. If you might know or not know, S&P 500 has proven over the last years to provide a return of an average 10-ish%, which is great. Obviously, that's not guaranteed in the future. I am invested in S&P 500 since 2021, and I have been really pleased with it for the past 2 years. There has been times where it was down, yes, but I just left it there and I did not mind, and as you can see now, everything recovered, so I am very happy with that. The other one, I have almost 20 shares. I might even it out because it looks really funny when I look at it now. It's 19.6 shares, and it's up over 14. But overall, very happy. This is something that you need to keep in mind though. If you're going to invest your money, you need to know that it is associated with risk. It's not like putting money into the bank where it's guaranteed that you're not gonna lose it, but there's definitely like an amount that is covered by the bank, that is insured, and you're not gonna lose it, right? If you put it into high savings account. But with investing, you might lose. As you can see, I have few stocks that are losing me money, are not keeping up with inflation, and are not doing well. So this is something very important to remember, and this is why ETFs are much better for an average person and that does not know much about investing, because they're much safer, and they track all of those companies. And I do believe it's really hard to time the market. I made some mistakes because I thought that I am timing the market and I am doing it quite well, even though I had no clue at the time. But and that's what I was thinking. I was learning, and I still am learning. And now let's move into my ISA. I find it very simple with Trading212, that you can just switch between those accounts. If you live in the UK and if you are not using an ISA account, I would highly recommend you to research that and to open one with any platform that you like. But ISA is definitely worth it. You can max it out up to £20,000 a year per person. And so that is really generous. It is a tax-free account. Clue about that because when I did first come to the UK, my husband did not know about that. Even though he was born and bred in London, he did not know about that. Even if he knew, then he wasn't really investing into that. And that is something I found out later down the line. And I wish someone told me earlier. I come from an Eastern European family where I was taught to save my money and invest my money into property because that's what my parents find a good investment, safe investment. It's also a physical asset, right? You can also rent it out, etc. But they do not trust any of those, stocks, ETFs, etc. And this is something I was never taught about. So I am still on my journey and I'm still trying to be as financially literate as possible. So yeah, let's jump right into the ISA account. As you can see, I do hold the same ETF in my ISA as I do have in my investment portfolio. This is the VUSA, S&P 500 from Vanguard, and as you can see, I am 5% up on it. Why is it so low, you would ask me, in comparison to my investment portfolio? This is because I made some kind of small mistake here as well. So I had this lump sum of over 6,500, and I decided to put it all at once in that fund when it was basically on its peak. I did not decide to dollar cost average, and this was my mistake here because I thought that S&P 500 will keep going up. It did not. It did fell, and it fell quite heavily. This is why I was on minus for a very, very, very long time. And this is a perfect example of the fact that there are so many strategies, and picking one is quite hard because I had few options here. I could put a lump sum, which I did, or I could dollar cost average it by the month, by the week. I did not as well. Or I could have split it, that amount, into a few different ETFs, but I also did not do that. And there's no perfect option to choose. Either of the options can have consequences in better or worse returns. And that decision led to this ISA not performing very well. And I am okay with that because I came to the game with a healthy mindset where I knew that this money could be potentially lost, or this money could not outperform the inflation. And this is totally okay. I am still up 5%. If I held it in a savings account, maybe I would have slightly more at the moment, but I don't think that it would be a significant amount. So I am still very happy with that, but this is definitely a good lesson for all of you that are beginners. If you're not a beginner, you probably know this yourself, or maybe you have been fortunate to only be in profit the whole journey. This is something to really remember. If you're starting to invest, first of all, you need to be aware that you might lose the money, or you might lose some portion of the money. I wouldn't say in the stock market is as volatile as investing money in crypto, because if we talk about crypto, you need to be prepared that you might lose all your money, right? Or 90% of it. But here I would say the market is more stable and more secure, and it's easier to navigate than crypto. However, you still need to be aware that you should be here for the long run. So if you want to retire early and fire follows the rule that if the market continues to perform as well as it has in the past, and give you around 10% of return, which it has in the past, if you take a long amount of time, then the average return for S&P 500 has been 10%, which is very good, right? But you need to consider that this is over a period of 10 plus years. So if you want to retire early, you need to think about 10 or 20 years ahead. And it does not have to be a huge amount. It can be also over, 30, 40 years, depends how old you are, and how much you want to contribute. If you're younger, you can start slow. You can start with £50, with £100, with £200, whatever you can afford. I would highly recommend to start slow. I know that statutory pension is not a guarantee for us younger generation. We don't know if the pensions will exist 30, 40 years down the line, and if they will exist, how much you will really get. Because when you look now in the UK, the pension is peanuts, the basic one. The minimum one is not really great, and there are private pensions. I do have also one from my employer, but still nothing is guaranteed, and we just have to hope for the better, but at the same time think about our financial situation. Okay, guys, I think this is it for today. If you have any video requests, please let me know in the comments. I will be happy to make a note on each of them. Please let me know, how are you doing on your journey? Are you just starting? Have you invested some money yet? Which platforms are you using? And overall, how is the market treating you this time of the year? I cannot believe we are already at the end of August. So this is it. Thank you so much for watching. Thank you so much to each of you that subscribed to my channel. I cannot believe there's 50 of us, people that are interested in investing and following me and my journey. I really appreciate it. So if you haven't subscribed yet, hit the subscribe button, like this video, and stay tuned for upcoming ones. Thank you. Take care. Bye.